Greetings everyone, and this is your S&P 500 day trade setups just before the US session. So apologies for being late, but a few technical issues on my side. Anyway, we had a bit of a meltdown yesterday, and as far as I'm concerned, we have pretty much met the measured move. That was the range that we were in. We broke through the range, and we're now hovering down here. Now, the big question at the moment is, where is the level we need to pay attention to? The closest one I can see right now is over here. I'll get to you now. That's the first one. And then there is one more which does interest me as well. So there's kind of a zone down here which we need to pay attention to. If that gives way, then we're definitely heading a little bit lower down to this area here. Oscillators have come off the top. The diversion that was in play has played out. This rectangle here can go. That was the measured move. We're kind of just hovering here at the moment. For me at the moment, this is pretty much still wait and see. We've got the jobs number coming out. So just understand what happened yesterday. The Fed's minutes came out, and the minutes are normally just basically what was discussed in the Fed's meeting. And then all of a sudden everybody panicked because the Fed said exactly what, well, the minutes said exactly what they said when they had the meeting last 2 weeks ago. And yeah, so why we panicked, nobody knows. But it's all about potential interest rate increases which are going to be accelerated. So at the moment, that's kind of what drove the sell-off yesterday, and it was quite significant. The Nasdaq was down 3%, and S&P 500 down 2 point something percent. But anyway, it's nothing for me to worry about at the moment. It's actually looking like some great areas coming up to add to the long-term portfolio, but also to start looking at some day trading opportunities as well. So looking at the 3-hour grouping of the oscillators at the moment, which is fairly significant, and not really any diversions here. I just want to check if there were diversions on the 8-hour. No, nothing there. Let's just get down to the hour and we can start having a look at the levels. So remember what I said to you, there is nothing, I suppose nothing is probably not the right word. There is a little bit of structure, but it's on the hour rather than on the higher time frames, and that's kind of where we're bouncing around at the moment. But there's still no rejection or exception of those levels at the moment. So if you look at the oscillators, you can see that the oscillators have now sort of starting to separate far apart. Normally when that happens, we get a second leg down. You can see the consolidation that's happening between these levels at the moment is not really sort of assisting us at the moment with a decision. So I'm of the opinion we need to wait for this 46.50 area. So it's 46.64 and 46.54. That's kind of the zone that I think we need to wait for. The only thing that's going to change my mind is basically a break and a retest of this tail here, because that puts a double bottom into play, and that is around 47.16. So I suppose you could argue that 4700 is the key at the moment. If we can hold that today, then I suspect we have some potential moves to the upside that we can start looking at. But for me, for now, this is sit tight, sort of overreaction to the Fed minutes. We're basically reacting to the information we already knew. That's basically what it boils down to. So we are waiting for the jobs number. You know, if the jobs number is a good number, I suspect this is going to be where the value hunters are going to be looking. They're going to be waiting in this area to see what happens with the jobs number. Good jobs number, great opportunity to jump in for a long. And that's kind of my view at the moment. So sit on my hands for now, and we'll wait and see what transpires tomorrow with the jobs number. That should be the trigger this year that we're looking forward to get going, at least for the next 3 to 4 weeks. Anyway, hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.